It's decision time in Vienna. OPEC must decide whether to maintain a policy that has caused oil prices to collapse from last summer's high. It's all about Saudi Arabia and how much that oil giant produces. Here to put it all into perspective is our own Alix Steele. Alix?
How do you feel about 10 million barrels a day?
Feels like a lot to me.
It feels like a lot of oil, and that's exactly what Saudi Arabia is producing right now. It's right around a record. But I wanted to put that in perspective with sort of the rest of the world. We talk about shale, right, and how prolific that is. Well, shale is only 4 million barrels of oil a day. OPEC is 31, and non-OPEC, we don't talk about this enough, non-OPEC is 58 million barrels. So yes, Saudi Arabia is extremely influential in the world. It produces a lot of oil, but there are a lot of other fish to fry in the sea as well.
But it's all about marginal production, like the marginal increase, right? So shale, right? Before shale existed,
yes.
America produces, what, 9.5, 9.6 million barrels a day?
Yes.
Before shale existed, it was in the fives.
But it's also about growth. So if you take a look at where the growth has been in the last decade, OPEC and Russia, for example, their growth profile has only been about 5%. The U.S., 75%. So again, we go back to the idea that, yes, it was very important for Saudi Arabia to produce a lot, but the growth is Canadian oil sands, Brazil deep water drilling, and U.S. shale is where that growth has really been.
Why exactly do Saudi Arabians want to produce so much oil? Like, what's their ultimate goal here?
There's two. Great question. I love talking about this. Number one, market share. You're going to make fun of me, I know it.
I mean, honestly, like the enthusiasm up in this house today is just amazing to Lisa and Alex.
Number one is market share. It has been slipping. China in particular, their market share for Saudi Arabia has fallen from 21% to 15%. That's where they make a lot of money, and they've been actually lowering, in some instances, their official selling price to kind of get up on that. And one of their biggest competitors, according to analysts, is actually Iraq. Comes from within OPEC, not necessarily from the U.S. They compete for the same demand over in China. The other big deal, they want to hurt high-cost producers, not in OPEC, not necessarily in the U.S. And that's those 58 million barrels of oil that we were talking about earlier. That's deep water, that's Arctic, that's Nigeria, that's Angola, that's Australian LNG. Not yet, but it will be. So already we've seen about 2.6 million barrels a day of projects that have been sort of put offline for the next few years. 22% of deep water drilling, actually 30% of deep water drilling could be at risk. That's according to Citi. That's tremendous. Deep water drilling is a huge supplier. That's where we see Brazil get most of its production from.
But more than anything, it's the timing of those projects.
Yes.
If the oil price were to recover, those companies will commit capital again because these are 25, 30, 40-year projects in some cases.
Maybe. But the volatility could also have some producers scared. If you see the volatility in prices around $70 to $75, if that's really where we're going to end up here, is that enough for something where you're going to commit billions and billions and billions of dollars? Or is this a long-term structural shift?
Then couldn't one make the argument, why do they want to produce so much when the price is not at a good level? Wouldn't they want to say, you know what, I'm going to hold off, try to get those prices back up, and then step back in the game? I mean, they want to regain market share, but market share when the prices blow. Yeah,
they can sustain it, though. I mean, their break-even in Saudi Arabia is about $105.
Technically speaking.
Yes. It's about $105. So, yes, if we're looking at Brent at around 60, they are struggling with that, right?
Saudi Arabia?
Is break-even about 105.
Really?
Very skeptical. Yes.
I thought Saudi Arabia's break-even was way lower. They pump oil at some of the lowest costs in the world.
According to Bloomberg and also other analysts, we're looking at 105. So it is difficult for them.
Oh, no, on the budget.
On the fiscal break-even.
Yes, the fiscal break-even. No, not the production cost. Production cost is like $2 a barrel.
The fiscal break-even, 105. So yes, at these prices, it is difficult for them when they need to spend so much in terms of their country. They get a lot of their revenue from, obviously, oil, right? But
and the Venezuelans are in the same boat. The Russians are in the same boat. The Iranians are in the same boat.
Yes. Venezuela, though, really does want higher oil prices because they actually need high oil prices to make money off of a barrel of oil. But they have a lot of foreign exchange reserves, and that's part of the reason why they can sustain that. And they want to do it because they want the market share. They can sustain it. They don't care. And that's what we're going to hear out of that OPEC meeting.
There is no one on planet Earth who likes to get greased up more than Alix Steele. There you go.
Alex
talking oil.
For a second. He digs it.
You know what? You really love it, and I love that about you.
I do really love it.
Thank you.
Thanks, guys.